Welcome to another episode of Unlocking
Silicon Valley.
Happy podcast day.
Happy podcast day, boys.
podcast.
It's a beautiful 80 degrees outside.
Yep.
And I'm in my hoodie.
And you're in your hoodie for some strange reason. David's wearing white because it's
hot and it's supposed to rain this weekend, right?
That's right, but we'll enjoy the last day.
When I left the house this morning, it was cold. And I was like, I would probably need a hoodie. And then it just got really hot.
Your car doesn't tell you the weather when you get in it. Hey, G, take off your hoodie. It's going to be hot today.
New feature for Elon Musk.
Yeah, do the update.
Yeah, an update over the air.
All right. Well, here we are. I'm going to cover stats really quick, market update. We have about total between single family homes, condos, townhomes. We have about 1,500 available, which is up by about 200 from 2 weeks ago. But the thing I want to point out is most of those gains are from condos and townhomes. So, kind of like we've talked about over the past couple of weeks, still a kind of a rough time if you're a condo or townhome seller. People still gravitating towards single family homes, wanting that big backyard, no HOA. There are a lot of challenges with HOAs, insurance, condo developments right now. If you're a condo or townhome seller, make sure your place looks great. Make sure you have it priced right. Otherwise, it's going to sit with the other, 781 condos and townhomes that are out there right now.
That's insane. It's almost the same as, it's lesser than single family, right? And that doesn't include the coming soon.
Correct. Yeah, so inventory is coming up. And one of the reasons why condos and townhomes might be sitting on the market longer, Jeet, I'll let you kind of head that up. There's a little blacklist that I think most condo owners and townhome owners in California don't know about.
Exactly. There's a federal blacklist of condos. It's the agency Fannie Mae that won't purchase loans for these units that are, going up for sales because, and as a result, the buyers can't get their loan approved.
So let me add to that. So Fannie Mae, Freddie Mac, they are the nation's largest backers and purchasers of mortgages, mortgage-backed securities, right? So conventional financing, which I forget what it goes up to nowadays, 800 and something thousand. Typically, if you have a condo, townhome, single-family home that falls under that amount, Fannie Mae, Freddie Mac will write the loan on it or underwrite the loan on it. So you get good interest rates, reasonable down payments, all that stuff. So the majority of loans up to that loan amount, get sold to Fannie and Freddie.
Exactly. And because of these, communities having structural issues or insurance coverage issues or even paperwork issues, like some of these HOA management companies aren't filling up the paperwork correctly, leading to issues that buyers are facing that are trying to buy these condos.
Yeah, and the biggest reason, according to Fannie Mae, is that these communities are underinsured, right? So back to an insurance problem, and there's 733 of these communities in California.
Jeez.
And in Santa Clara County, there's 39. So there's 39 condo townhome communities in our county that home prices in those complexes are going to get pushed down because they no longer qualify for traditional financing. So then you have to get something that's called a non-QM loan or some type of private financing. And so because of that, it's suppressing values on condos and townhomes.
Yeah, I remember 2 years ago, I had a client that I got into contract in Santa Clara. And at the time, this issue wasn't known because at the time there were only about 150 or 170 complexes around the Bay that had these issues, and it was a less known problem. And in the middle of escrow, we removed all our contingencies, buyer qualified, but we were still waiting for the HOA cert to come in. And then the HOA cert comes in, and the HOA management company, which was Community Services Management at the time, didn't fill out the paperwork correctly, and then the lender had their loan denied by the underwriter because of the comments that they placed in there. So we asked for more information. The sellers helped us get more information, and because of disclosure of new information, we were able to get out of there. But it was a HOA that was probably going to implode, and that's one of the communities that still has that issue.
Yeah. So let me run that back a little bit, and my allergies are getting the best of me today, but Community Management Services, who manages lots of HOAs throughout the valley, when a buyer purchases a condo or townhome in that community, you're required by law to hand over HOA package. It's got the financials, the reserve fund, the meeting minutes, all that stuff. But the lender also needs a questionnaire filled out. That questionnaire says, is the complex in litigation? How many renters versus, owner occupied? And those liability questions. And so Community Management Services and their counsel has taken a stance that for liability reasons, they're choosing to not fill out that form in its entirety. So the problem with that is we go back, Fannie, Freddie, all those guys say, well, without it completely filled out, we're not going to write, the loan for that property. The challenge that we're facing in our market is people are writing non-contingent loans. Non-contingent offers. And gee, you're lucky you got your money back, because most of these instances, the sellers are like, hey, you wrote an offer with no contingencies. There's even a contingency in there for HOA. You chose to ignore it. Your lender didn't ask the right questions. Your agent did it. So we're not going to give you your deposit back. But ultimately, again, it just hurts the sellers and the buyers trying to buy into that community, right? And so prices on condos and townhomes, I would suspect, will either be flat this year or even drop up to 8 to 10%, especially in those communities that are affected by the mortgage blacklist, or when you have a HOA management company that refuses to fill out the form.
Exactly. One of the properties I was working on last year for a condo buyer, they had because of these forced structural issues that they're being made to repair, there was a special assessment for $42,000 on each unit, and the buyer and seller decided to, okay, let's split it. But in the middle of before we got our offer accepted, I figured out that there was loosely mentioned in the HOA minutes that there could be an additional $30,000 2 years from now on each unit. So that's a total of $70,000 of special assessment. So it's affecting a lot of communities out there.
Yep. And so it's either special assessment or they increase the HOA dues, right? They'll double the dues, borrow the money to pay the assessments. And, it's bad for everybody.
Exactly.
Question with that. So if you're listening to this right now and you're a condo owner, and we all can tell stories on recent transactions where we've either bought or sold. Like for me, I had a seller that we had this exact same issue. HOA was blacklisted. We had two offers, one loan, one cash, but the loan was about $30,000 higher.
Yep.
It blew up. We ended up going with a $30,000 less offer, but it was cash. We closed. It's all good. If you get a seller or we get a seller, what are we going to tell them? Because there is that option of a cash offer coming in. I even had an agent in the same community call me and go, hey, I have this one. It's sitting. Like, how did you sell yours?
Yeah.
Not thinking like maybe cash was on top of them. Because like, if you're sitting there with the seller, like, yes, a loan's probably not going to go through, but we are in the Bay Area. There is a lot of cash here. Do you just go for it and say, hey, let's just see if we get a cash offer, or like, how would you navigate that?
There's one or two lenders in California that will lend without the condo cert. It's a higher interest rate, right? So the terms aren't as good. So, I'm going to educate any condo or townhome seller that we have, right? First, we're going to look and say, hey, is your community managed by community management services, right? Or we can get one of our in-house lenders to submit a condo questionnaire ahead of time as part of like the listing process to make sure that they're going to complete it all, make sure it's not on the mortgage blacklist. But if it's any of those things, then we have to look for alternative financing, right? And have that prepared. And and cash offers as well. Because we're in the problem solving business. So I would hate to just say, hey, let's put it on and hope for a cash offer.
Right.
Because like you said, we know the cash offer is going to expect a discount on that property.
Yeah. And a lot of these condos that I'm recently seeing, there are still loans being closed on these. So there's special lenders like David mentioned that we could use so that, we know it's tried and tested and it has gone through in the past.
Yeah, there's a little bit of a workaround as well. So if you take a bank like Chase, and they've done loans in that community over the last year, before all this kind of came into play, then they will likely do it without that condo cert.
Okay.
Because that condo cert that they have from the past is good for a year. Yeah.
So if you're out there listing, you have a condo, give us a call.
Yeah, condo, townhome, before you list it or list with somebody else, like you have to understand who the management company is, if you're part of the blacklist, what the lending options are for prospective buyers. Because like I said, condo market inventory is growing faster than single family right now. Days on market are higher, pendings are down, and it's because of reasons like this. And so just make sure you're working with the solution-based team or agent.
Amen.
Who you work with matters.
Come on.
That's what they say.
I wanted to actually bring up another topic, affordability in the Bay. What do you think a single person in San Jose needs to make to live comfortably?
There's not enough money.
No.
I was like, define comfort, right?
But minimum?
To like rent and live or own and live?
Rent and live, or actually let's do own and live.
A single person would probably have to make $250,000 a year.
What are your
I
guesses?
was gonna say 200.
So it's actually 147,
Ah.
which I don't know if I agree with. I don't know.
Well, you're not going out to dinner.
Yeah.
Yeah, I mean-
You're not going to Whole Foods.
You're taking the bus.
So I don't think it's comfortable, but
Yeah.
but 147 is what a report recently said. And then what do you think a family of 4 would need to make?
Well, as a family of 7, I know, I need at least $500,000 a year.
Close
$2.
actually. What do you think?
350.
Yeah, it's about 375.
Yeah,
as
so
well.
a family of 4 in the Bay Area needs $375,000 to live comfortably.
Yeah, so a husband, wife, and maybe 2 kids need.
Yeah, and what are we saying? That's not like saving a lot. That's probably not investing a lot. That's
No.
probably just to.
Renting a house if you're lucky, right?
Yeah, renting a house or maybe owning a townhome possibly with 400,000. I mean, that's possible.
Yeah, but you're gonna be tight.
Yeah, but not a good school district maybe, or just it's going to be tight. I think $500,000 and over definitely is a little more comfortable around
Which
here.
is insane when you think about it, right? I mean, that is so much money.
Yeah.
But look outside, guys. It's so nice.
It is, but then my heart, goes out to teachers, first
Of course.
responders, all the blue collar folks that, basically they've pretty much been pushed out of our market.
Yeah, they don't live here.
Home ownership.
Yeah, they live in Manteca. They live in Tracy. They live in, if they're blessed, Livermore or Dublin, Morgan Hill or Gilroy.
I mean, think about the last, 10, 15, 20 buyers that you guys have worked with. What percentage of them are either in tech or they are, either have family money or they own and run a business?
Yeah.
95%.
Yeah.
Exactly. I think majority of mine are husband, wife, both in tech, and they both, bring home probably 300-ish each. So it's about 600 household income.
Yeah.
Which is, and they, they're buying maybe a 1.5 to 1.7 million dollar house.
Yeah. Same or, family member, dad, mom, somebody is coming in to help.
Yeah.
Exactly.
The last teacher I helped buy a home was down in Willow Glen. It was a condo, and that had to be 7 years ago.
But don't they have like a special loans for them?
They do, but you still have to find something that they can afford.
Yeah.
Right. I mean, hey, you can waive a down payment, but if the average price is $800,000, and then it's 100% financing on $800,000 plus the HOA plus the property taxes on one teacher's salary,
It's very difficult.
Super hard.
Very difficult. I've had conversations with even like one person in tech out of the husband and wife. Maybe one's a teacher, one's one works in tech. Even for them, it's quite difficult to find what they're looking for because they have kids. They want a good school district. That's just no longer possible.
No.
So you got to clear well over 300 to afford something around 1.3 to 1.4. And that's getting harder and harder. So affordability definitely an issue still for a lot of people in our area.
Okay. So quick question for the two of you then. I mean, you've only been in business, both of you, less than 5 years. I mean, other than the little dip that we had during COVID, you haven't been through a down cycle. When do you guys predict that we are going to see single family home prices drop?
2031.
2031.
Yeah.
So 6 years from now?
6 to 7 years from now.
Okay. And why is that?
Yeah, let's unpack that.
I think our market's very cyclical, and I think by 2031 or 2032, the low inventory crisis, I hope, would be over. We would see more homes on the market. People will be very used to the rates around this, 5 to 7% ish. Hopefully, they go down. In that case, then probably won't happen for a while. But if the rates continue to stay higher, I think inventory will get to a good level. And I think the only time we see a correction is if we see mass employment beforehand.
Okay.
I think it's going to be farther. I think it's probably 10
So prices are going to go up for the next 10 years.
steadily or
Yeah, and I'm talking even 1 to 3%.
Yeah, no, I think so. I mean, I don't know. I think everything's kind of signaling to lower interest rates in the next couple of years.
Okay.
Even if they're we're not going to see like the 3s and 4s, I don't think. But even if we kind of dip into the high 5s, low 5s, it's still going to progress things. And then just like you said, once things kind of normalize, then we may see like a flattening. But I don't know. I don't.
Okay. Well, I'm going to take a little more pessimistic approach. Typically in the Bay Area, real estate cycles, 6 to 8 years, just say, right? Prices go up, they flatten, drop, come back up again. We've not had a real drop in prices. If you take COVID, that little blip that we had while we're all locked down, if you take that out, we're basically on a 13-year run. I mean, it is unprecedented in the Bay Area. I mean, San Francisco hasn't even experienced that, right? They've dropped and they're kind of finding their way now. But there is a lot of uncertainty in our world right now, right? And we've always been protected here by stock market and jobs. So, you know, we've always said, as long as those two things stay up, we'll be fine. There's got to be a reckoning coming pretty soon because prices, in my opinion, can't continue to go up for 10 more years. I mean, think about it now. Even at 3% a year, you know, or 5% a year, which is kind of what we average. I mean, at what point is enough? Yeah, rates may drop and that'll push prices up a little higher in the short term. But I have to think within the next 5 years, we will see a 10 to 15% drop in prices.
I'd love to clip this and then visit
Yeah.
it again. 2031.
It's bound to happen, right? I mean, if you look at everything, if you look at the current administration, if you look at the cuts that are happening, AI at some point, right? I mean, San Jose is doing a big push to bring AI companies into downtown because honestly, I mean, that's going to thin the herd too, right? Yeah. And so it may take 10 years to get rid of a lot of those jobs, but I do think, you know, over the next 5 years, we're going to see some changes. I mean, you know, it can't just keep going up.
Yeah, I mean, the number of calls I've had over the last 2 weeks when the stock market took a, 8 to 10% tumble. I've had so many people being like, is the, is hell falling loose? And
and pausing, right?
Yeah.
Well, and people trying to get out of contract midway, right?
Yeah.
I mean, the deal that Aaron had.
Mm-hmm. So. Yeah, lots of people trying to renegotiate, trying to get out of deals, because they've lost maybe 20-30% of their portfolios. So lots of uncertainty. But over the last couple of days, I think the market's recovered a little bit too. So it's just crazy how tied our market is to the stocks here, right? Mm-hmm. Apple stock goes up, real estate goes up.
Yeah, no, absolutely. So we'll see. I'm saying got to be 3 to 5 years from now. There's got to be some sort of correction. Nothing lasts forever, right? Yeah. And we're 13 years in. If we go another 10 years, that'll be wild.
Do you think it was just a very short-lived recession that was anyway coming, but because of COVID, it just came and went like that?
It's tough to say because, it could have been technically could have been a mini recession, right? However, then the government pumped so much money into our economy. I still feel that it's artificially inflated because of that, right? How many people, especially in our market, took advantage of the EIDL loans and the SBA loans and, all that extra money to help prop up their lifestyle. So again, if you look at auto loan defaults nationwide, if you look at credit card utilization nationwide, all that is up, right? And that may not be as prevalent in our market because we're a little more affluent, but eventually it's all going to catch up.
And I think there's stats on like the savings. They can see like your savings accounts, like nationwide was like
down too
in the trillions whenever, and it's down also trillions since then. Like savings are at an all-time low and credit cards are at an all-time high.
Yeah.
I just don't think it's going to be I don't see an impact happening this year because typically, historically speaking, the year after the election year,
home prices
real estate prices go up. So so far we've already seen about 5, 6, or maybe even 7, 8% increases in different pockets in real estate since December. So some of these homes that were going for 2.6, I'm seeing them go for 2.8, 2.9 already. And so we've already seen a slight bump up this year.
Yeah, it's going to take at least 2 years for us to see how the current administration's policies affect our economy, right? So we'll see.
Yep.
Well, kind of with, we are in a unique market here. I have, sorry, Mark, not top 10. I have top 3.
Perfect.
Jason's top 3.
But then the third one in this one kind of begs a question I want to get your guys' opinion out. So 2024 nationwide top reasons sellers sold their house. Any guesses on 1, 2, and 3?
Well, it used to be like job relocation, move up, and death or divorce, right?
Yeah, I would say downsizing.
Downsizing.
Yeah.
Downsizing is number 2.
Okay.
Moving to another area, like
relocating.
Yeah, so that's number 1. So number 1, moving closer to friends, family, job relocation. Okay. Number 2, downsizing. Okay. And number 3, which I thought was interesting, again, nationwide, was the decline of the neighborhood. So the neighborhood was getting less desirable.
And I'm not sure that's the case in our areas.
I don't know. I was just having a conversation with an agent yesterday who, like me, kind of born and raised in the East Side, and I have a lot of fond memories of back in the day there. And he's saying now it's like it's worse. Like it's worse, than it was 5, 10, 15 years ago. His parents live off of Berryessa and Penitentiary Creek, which is actually, I don't even consider that the East Side.
That's a nice East Side.
Yeah. Lived there 30 years. Just recently went on vacation, house got robbed. Right. And, that homelessness, all the other stuff. So, I mean, I get it. I think you're right. It's hard to do here. You can't say, oh, I'm tired of living in South San Jose. I'm going to move to Almaden. It doesn't pencil.
Yeah.
But I think, throughout, the Midwest and a lot of other areas, it's a possibility.
I agree. I mean, I see a lot of people moving from Sunnyvale down to Almaden, but that's not really because...
Well, it's more affordability, and maybe they don't want the kids in such competitive schools and that, that sort of thing.
Yeah,
but
exactly.
I just wonder what the pull is on like the age, because just like what you're saying, if you're, in your 60s or your 70s and you lived here your whole life, sure, it doesn't it's not orchards or like even I have family that lived kind of like up Elm Rock, McKee, kind of near the country club, which was fantastic, back
Absolutely.
whenever. He's my uncle, so he's probably, 60, I think. And they moved out of the area just because their house got broken into, cars getting dumped on the street, like stuff like that. And, so decline of the neighborhood.
Just wait until Los Gatos has all those high-rise buildings. Then people will be like, my area was so great before.
Well,
I loved it.
Well, I think everybody says that, right? Most people don't like development and things changing. I mean, we read about here in Los Gatos, and everybody's worried about what's going to happen to their town, in 5 years or 10 years. But you talk to the sellers that we have now, and they're like, oh, it's not like it was 10 years ago. Of
course.
Right? I mean, it's growth and evolution, and people are resistant to change. But I will say this, kind of talking about neighborhood degradation or whatever you want to call it. Shout out to Matt Mahan, our current mayor of San Jose. Hopefully I pronounced his last name right. I don't know a ton about him, but I'm reading a lot about what he's trying to do to clean up homelessness. And he's upsetting a lot of people that support homelessness and measures and things like that. I have to think, if you're pissing off a lot of people, you're probably doing something right. And I see it, I live South San Jose off of Burnell. Youngest daughter goes to Valley Christian. So we have to drive down Monterey Road. And you would just see rows and rows and rows of encampments. And I mean, almost overnight, most of those are gone. And it seems like once they're coming back, they're getting cleaned up right away.
Kind of by the train tracks?
Yeah, the ones that run parallel, right, down Monterey Road. So, shout out to the mayor.
Hey.
It's probably unpopular. He's probably getting a lot of for it. But, I think ultimately, people want safety. We do need structure in place to help with those that are unhoused. But hey, keep doing what you're doing, man. I'm here for it.
Amen.
Yeah, my vote.
Amen.
All right, is that it? Are we done?
I have one more topic.
All right.
One topic.
Close out strong. Oh, this is a good one.
Ooh,
strong.
yes.
Crawl spaces or slab foundations? Which one do you prefer and why?
Go ahead.
So right out the gate, I go slab.
Okay.
Because it feels more secure. It feels more like I'm not going to have any problems.
New.
Yeah. So it's like new house, new construction. It's on a slab. It's just kind of like check, especially as being like a buyer's agent. I don't really have to like worry about digging into that and making sure we're not buying something with like
no crawl space inspection.
I'm like, oh, thank goodness. We don't have to worry about that. So so that's why I say that right out the gate.
What about you, Dave?
Well, do you know why they started pouring slab out here?
Because of the liquefaction areas, right? Where you have more...
Because of the what?
The liquefaction.
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 That's that
word of the day.
Right?
Yeah, pronounce it
Jacob,
correctly.
word of the day, liquefaction.
Yeah, because the soil's always moving, and in some areas the water table is high. So, when you have crawl spaces with piers, they all get pretty messed up and they're sloping. And
A lot of that where you live, right? Sakamoto.
Yeah.
Almaden, some parts of Fremont, they like, for example, Ardenwood, all built on slab. And I think that's because of the soil.
That is a great answer, but you would be wrong.
Sounded good, Jeet.
No, I mean, it makes sense, and I think there's logic to it. However, we started pouring slab out here because it was cheaper. It is a hell of a lot cheaper and faster to pour a slab concrete than it is to do, post, pier, perimeter, all of that. So I can see the appeal of slab. However, but you can't inspect what you can't see. So when do you know there's a crack in your slab? Well, when your house goes like this. The nice thing about crawl space is you can run your plumbing and electrical underneath it. You ever try to rewire a slab house? It's hard. You have to open up all the walls and do all those things, and plumbing as well, right? You want to add a bathroom, but there's no plumbing on that side of the house. So what do? You got to go up in the ceiling, or you got to go through. So I definitely, high water tables, flooding, all of that stuff, earthquakes. However, I still think that a retrofitted, crawl space home will hold up pretty well in an earthquake if it's done properly. So I'm kind of team crawl space.
I like both for different reasons. I like the slab because when I walk on it, it doesn't give me that thumping sound, right? And then I like the crawl space or concrete perimeter foundation because if I don't like my kitchen 20 years later on this corner and I wanted to switch it where the living room is, I can do that because I can go under the house, I can adjust where all the piping and wiring and ducting and everything goes, and that gives me that flexibility. So both have its pros and cons. I think a lot of people though like the slab because of the it just feels more sturdy.
I would agree, but just know it was done because it was cheaper. Good stuff, G.
Boom.
All right, Jay, G, we're out. Till next week.
Yeah.
Oh,
what do you got coming up?
If you like us, if you love us, please give us a Google review. We actually have a competition going right now. Gita's winning, and I never like to see Gita win. We got movie night next week. If you got an invitation or a ticket, great. If not, it's sold out, so catch us on the next one. Billboard will be back up next month. And we want our listeners and all of our clients to pick the billboard design. So we'll be providing a couple of options. And I think that's it. Go enjoy the sunshine, boys.
Fantastic. Until next time.
See you guys.
Later.